Welcome to the channel Get Rich. Today, the company we are going to look into is CAMS. So if you are a mutual fund investor, you might already know CAMS. So today we are going to look into what are the revenues of CAMS, and then we are going to look into different financial parameters of CAMS, and then finally the valuation and the price target for the next 1 and 2 years. So let's get started. So before going into the video, if you like this video, please like, share and comment. And also if you are new to this channel, please subscribe. And if you would like a free email newsletter from this channel, please subscribe in the link below. So let's get started. So CAMS is a technology driven financial infrastructure and service provider to mutual funds and other financial institutions. So they are the India's largest registered and transfer agent of mutual funds with an aggregate market share of almost 70%. So in this market, they are like it's a duopoly market. So there are two big main players and others are very small players. So they're two big ones. The one is CAMS and the other one is Carvi. So CAMS has around aggregate market share of about 70%. So they are the market leader. So they services all top 5 mutual funds and 10 of the 15 largest mutual funds. So 19-year average relationship with 10 largest mutual fund clients. So they are having a lot of domain expertise and processor and infrastructure to cater to different mutual funds, alternative funds and insurance companies. So they have pan-India physical network comprising 272 service centers spread over 25 states and 5 union territories. So they have established track record of delivering robust financial results. So they have their fastest growing mutual fund RTA and high return on equity and EBITDA margins. So they also have Marek shareholders, they including Great Terrain, an affiliate of Warburg Pincus, even though they sold like 25% of their share in the recent months. So they are still the largest shareholders in this company. And HDFC and also HDFC Bank. They have experienced management team as well. So as we see, they are the largest registered and transfer agent. They have 272 service centers pan India. So until financial year 2021. And if you look at their transactions, so they are handling 98 million transactions in financial 2015, and currently they handled 323 million transactions in financial year 2021. And the company also grown their market share from 61% in March 2015 to almost 70% in March 2021. Also, if you look at the CAMS portfolio, so they have top five mutual funds and the 9 of the 15 largest mutual funds in India as their clients. And their market share, if you compare that with the industry AUM and the CAMS serviced AUM, so the industry AUM is 38.2 trillion rupees, and then AUM serviced by CAMS is 26.7 trillion. And also if you look at the equity side, so equity average annual asset under management, which is 16.9 trillion rupees for the industry, and then CAMS serviced equity AUM around 10.9 trillion rupees. So they are the huge market leader in this space. And if you look at some of the key highlights in the recent quarter, so they have like AUM of CAMS service fund reach a historic high of 26.7 lakh crore, and they have a lifetime high in transactions. So they are doing pretty good in the recent years, because the markets are also the markets are not that great, but still in the recent years it went up after the corona crisis. It went up pretty huge, because if you want to understand their business, so they service a fixed fee for based on their size of the AUM for the mutual funds. So their revenue is mainly based on the size of the AUM of their clients. So if the market does well and the asset under management of different mutual funds goes up, their revenue goes up. If the market does bad and asset under management of different AUM goes bad, so they are going to have poor performance as well. So they are kind of like based on market and the asset under management of different customers. So that's something to note. And also if you look at the new SAP registration, so the momentum continued to clock 43 lakh new registrations in the current quarter, and their SAP book also grew by 9%. So also if you look at the CAMS digital properties, so they service an aggregate AUM of 7.9 lakh crore, and CAMS website service 11 lakh visitors each month on average in quarter 3 financial 2022. And if you look at the My CAMS investor app, so a million users logged in every month during the quarter. And October 2021 recorded 10 million user sessions, making it the most preferred investor app. And also they have Mutual Fund Central or MF Central, a unified investor portal developed jointly by CAMS and the other RTA, went live in September 2021 with over 1.25 lakh registration in the first quarter since it launched. So the mobile app also launched in December 2021. So they are also doing pretty good. So if you look at their other apps or other industries other than mutual funds, so they're also doing CAMS Kara. So CAMS CRA platform developing, it's also progressing well and are on track for Q4 financial 2022 launch. And they also do CAMS FinServe, which is account aggregator platform. So it's also live with top banks. So they also have TSP solution executed by Sterling Software. It's also a 100% subsidiary of CAMS. And then to integrate FIUs has been also received well. So they have 10 new signups. And also the market is getting competitive. So they are getting more and more customers in the account aggregator platform. So recently the test has been performed with Kotak SBI. So we'll look in detail the accounts aggregator platform after some time. And also their CAMS commenced operation in Gift City in quarter 3. So they have 2 new clients have been signed up during this quarter. And if you look at the alternative funds or PMS, so they have 11 new signups in that category. And CAMS Wealth Serve, which is to onboard onboarding platform, is also gaining traction with 6 new signups in quarter 3. So they're also working in different industries other than mutual funds, though even though mutual fund is their biggest revenue creator. And if you look at some of their key financial parameters, they have a market cover of about they have a market cap of about 12,000 crores, and their current stock PE is 44.4. And if you look at the return on capital employed, it's 57.7%. That's pretty good. That's amazing. So anything more than 15-20% is already very very good, and 57.7%, that's phenomenal. And if you look at the return on equity, it's 44%, very good. And if you look at the return on assets, 28%, they are doing phenomenal returns. And if you look at their recent sales growth, it's 26.8%. Debt to equity 0, they almost have no debt. That's also very very good. And if you look at the price to sales, 14.8, seems a bit expensive, but we have to look at their growth perspective going ahead. And also if you look at the price to book, it's 26.6, and then current ratio 1.42, also good. And if you look at the PEG ratio is 2.16, that's not that great. Lower the PEG ratio, better it is. And then if you look at their price chart, so they almost reached 4,000 at some point, and it made a recent corrections, and recently it's trading around 2,500 rupees from 4,000. So it almost lost about 40% of its value. So currently it's trading around 2,500 rupees. And if you look at the P ratio of this particular company, it even reached 80 P at some point. So currently it's trading at around 45 P, and the average P for this company is about 52. But then they don't have much trading history, so the company is traded around 2 years in the public market. And if you look at the business segment, so where are their revenues are coming from? So almost 75% of their revenue is coming from mutual funds, asset based, and then 15% is coming from also mutual funds but non-asset based. So non-asset based includes transaction revenue and some central revenue based on chatbot and call center services. So these are the almost 90% of their revenue is coming from mutual fund business, and they have 10% of their revenue is coming from non-mutual fund businesses, which includes alternative funds and also pension funds, and also all other categories included. It's 10%. So mutual funds is their biggest revenue creator. And if you look at the CAMS mutual fund services, what are the services CAMS provide for mutual funds? They are providing a whole lot of services. So the service aggregators, they do best practice implementation, regulatory change implementation, and so on. And then if you look at the next one, so they also support high volume data transactions, and then infrastructure stability. They support timely launches of NFOs and so on. So they are the knowledge partner also. So they have innovative product development, and then they also provide different data analytics also. And if you look at the customer care investment services, they do call center services, mailback SMS services, service request and account information, front office services, transaction processing. And then distributor services, they also do recording of brokerage structures, brokerage computation, distributed queries, and so on. And they also do transfer agency services like transaction origination, operations, investor services, risk management, and so on. So these are the main CAMS mutual fund services. So if you look into the other apps and platforms, what are their other apps and platforms they have? So they have a whole lot of apps and platforms. So they have YMF CRM, which is mobility solution for YMF RMs and SMs, and then they have mutual fund central. YMF central, we just discussed that unified portal to serve investors across the mutual fund industry, and they have CAMS Smart Business Intelligence Service, CAMS Serve self-service chatbot for investors, and they have MyCAMS app. So they have 4.8 million registered users, and they have DICE AMC interface for brokerage structure updation. So they have Edge 360 app and portal for mutual fund distributors and advisors. They have MF Dex, which is sales and business intelligence tool. Go corporate investment portal. MF Compass allows mutual funds to cite funds real time. So they have also MF 360 proprietary investment service app. So they also have CAMS WellServe, which is digital onboarding for PMS investors. So if you also look into these different apps and platform a little bit in detail, what are their different apps are doing. So their main one is CAMS, so that is alternative investment fund service and portfolio management services. So they provide services to investors, manage, record and perform fund accounting and reporting, among other services for alternative investment and other types of funds. So almost 25% of the other businesses revenue is coming from this particular business. Alternative investment for service and portfolio management service. So these are one of their biggest in the other services category. And then they have CAMS Pay, which is electronic payment collection. So they manage mandated transactions, including registering of mandates, initiation of collections, and they also do a lot of reporting services for mutual funds, non-banking financial companies. And they also expanded services, which includes offering UPI auto pay and net banking and so on. So they also provide several payment options in this CAMS Pay. And the next one is CAMS Rep, which is insurance repository and services. So which is they offer processing of new business application, holding policies in dematerialized form, servicing policies and other functions to insurance companies. So they are also expanding into insurance repositories. And also they have CAMS CRA, which is a registration agency, KYC registration agency. So know your customer. So they verify and maintain KYC records of investors for use by financial institutions. They also have software solutions. So their technology team develop software for their mutual fund services business and for their mutual fund companies, minimizing client investment in technological applications. And they also have CAMS FinServe, so that also we discussed. So it's account aggregator services. So they will be providing account aggregator services to banking and non-banking institutions, investment advisors, and so on. And then they have other tech powered solutions. They have MyCAMS, which is an mobile application for retail and high net worth individual investors to manage their mutual fund portfolio and transact across the CAMS serviced mutual funds. And also, if you look at the other one, they have GoCorp. We also just saw it in the slide before. So it is an investment portal designed for corporates and provides a single gateway to transact across multiple participating mutual funds. So that's also one of the key solutions. And then they also have DigiInvest. It's a single click, easy to use campaign management platform launched for mutual funds and distributors to target their investor base with customized transaction links to make lump sum purchases or new SAP registrations, SAP renewals, and so on. So they can also do a lot of things with the DigiInvest. So they can use, or any providers, they can use their DigiInvest solution to change, or they do some lump sum purchases or change SAPs or stop an SAP, pause an SAP, all these kind of services they can do with the DigiInvest. And then they have Digi NFO. So it has been created as a single-click investment feature for NFO investment. It's executed either directly by investor or facilitated by the distributor. And then they have Digi Loan against mutual fund investments. This is a very good service. So HDFC Bank and ICICI Bank are live with their digital loan against the mutual fund. So you can borrow against your mutual funds. For example, if you hold 10 lakhs worth of mutual funds, and then you can hedge or you can collateral, you can make your investments as a collateral, and then you can borrow money against that particular mutual funds. So that's also the service they are providing. So they are also in the process of integrating select large NBFCs onto their platform with specific customizations. So they also have Insta ENAC, so setting up payments for SAP leveraging NPCI e-mandate has been made extremely convenient with this facility covering 21 banks. It is implemented in select AMC websites, MyCAMS and Edge 360. And they also have CAMS
Serve, it's a self-service chatbot to help investors navigate through mutual fund services and investment options. It is available on CAM's digital property, social media channels, and so on. And then they also have sales and business intelligence applications. So MF Dex, so MF Mutual Fund Data Explorer is their data service for sales and business intelligence. So that's also something they do. And also they have MF CRM. It's a mobility solutions for mutual funds relationship and sales managers to better manage investor relationship. And also they have Cam Smart. It's also a business intelligence service developed to service mutual funds. So they have all these kind of different apps and platforms. And even they also have some front office enablers like MF360. It's a proprietary front office investor service application which allows mutual funds to track transactions. And also they have Compass, so assist in linking the transfer agents back offices with the mutual fund front office in real time. And also they have CAM's Recon Dynaxy, so the latest addition to their product stable helps driving operational efficiency for payout and recognition of general lectures, payments, and transactions. So they come up with a lot of apps and platforms in mutual funds. Most of them are in mutual funds. They are also expanding to portfolio management services, and also they are expanding to insurance and so on. So now they are also expanding to pension funds. So they have a certificate of registration for Central Record Keeping Agency for NPS, and received from PFRDA in Q4 financial 2021. So they are planned to launch this particular application in Q4 financial year 2022. And also if you look at their platform based P2P services, so they want to do these, expand them to pension services as well. So CAM CRA is the first approved entity in the NPS ecosystem for hosting the CRA application and data on cloud. So their CRA's revenue basis, current subscriber base, and fee structure is about 170 crores. So their NPS subscriber base is also growing annually, because not only the employers are paying for the insurance, but even different banks are selling pension services to individual people. So that's also going to do well. So initially they will focus on all citizen segment in phase one, and then followed by government and corporate sector. So this is also their they are also going into other industries beyond mutual funds. So that's also good to see. They are also expanding into other industries. And if you look the other services, so these are the biggest one as we discussed. So the first one is alternative investment fund services. They are the market leader, servicing over 100 PMS clients already. So they also offer intermediaries, revenue management, investment service management. So almost 30 to 35% AAF investing growth projected between 19 financial 19 to 24. So this is one of their key other services. And then if you look at the electronic payment solution, so they have they manage end-to-end ACH transactions and ECS and services mutual funds. So they also have 90 million ECS and ACH registration and transactions executed in 9-month financial 2022. And also if you look at the insurance services, they have almost 36.7% market share in insurance repository business with 4 million policies held. So that's pretty significant, 36.7% market share. And also if you look at the other ones, so they have a KYC registration agency, so they verify and maintenance KYC records, and they also have other software solutions. So they are also doing these kind of other services other than mutual fund business. And if you look at their key ones, so some of the other businesses, so we saw CAMS FinServe, they enable rapid, secure, and sharing of financial asset information. So if you look at the who are the currently live in this particular platform, so 8 entities are now live. So Advent, IDFC, Federal Bank, KVB, and AU Small Finance Bank, and others. So and also if you look at them, recently they also made 10 key wins in quarter 3. So that's one of their solution. And then mutual fund central, so they also have a mutual fund central platform, as we discussed. This is also one of their key product going ahead. And then if you look at their CAMS serve, so they are a chatbot with guided navigation to provide digital customer experience. So in 2019 they also extended to WhatsApp and Facebook, enabling investor transaction and queries through popular social media platforms. And they are the industry first machine learning based insta bank mandate change service, leveraging IMPS and built-in validations, so investors can make the change within minutes instead of 3 days and with no paperwork. So they are doing a lot of innovations, and also they are doing a lot of technological advancements, and they are providing a lot of apps and platforms to make life easy for both the investors and financial institutions and so on. And if you look at the client concentration, so it's all good, everything is good, they are doing good, they have a lot of mutual funds. But if you look at the client concentration, the company derives a significant portion of revenues from a few clients, and loss of one or more such clients will lead into significant revenue decrease. So the top 5 clients contributed 70% of financial 2021 revenue. So it's a huge client concentration. If one of the client or one of the biggest client decided to move to their competitor, then their revenue is going to suffer pretty huge. But they have a long lasting relationship with several mutual funds, so I don't think that will happen, but that is a risk. It can happen, so you have to make sure you factor in this kind of risk also. They have a significant client concentration, and this is one of the risk in this particular company, because the company negotiate pricing terms with these clients on a periodic basis, and then contracts permit them to terminate their arrangements by providing 3 to 6 months written notice. So it's not like every year or so they come and negotiate the prices, and then if it's okay then it goes ahead, or they can provide 3 to 6 months notice periods, and then they can terminate the contract as well. So that's also something to note in this particular section. And if you look at the financial statements, so the total operating revenue is growing at a 27.8% in the recent quarter, year over year. And if you look at the EBITDA, it also grown 41% year over year. Profit before tax 35%, profit after tax 37%. If you look at the EBITDA margin, it increased from 30% in quarter one financial 2021 to almost 45% in the recent quarter. But if you look at the sustainable EBITDA, the management guides around yearly 40s or 40, 41, 42 is the management guides. Also here, because they are having a significant good quarter recently. So if you look at that, all good. So 45% is pretty on the higher side. Even the management said the long term sustainable one, it will be 40 or 41. So that's also something to take into account. The company is currently in a pretty on the higher margins, and the margins can decrease in the future. So that also needs to be taken into account while deciding your price. And if you look at the financial statements, so quarter over quarter, so if you look at the quarter over quarter, so operating margin is 47% in December 2021 quarter. It's pretty higher side. And if you look at the sales, it's also increasing. And if you look at the net profit, it increased to 72 crores from December 2020, 74 crores, slightly decreased. So, and then if you look at the year over year financial statements, so they are doing pretty good. March 2011, it's 318 crores, and then recently in 2022 they are expected to do over 823 crores, and then their operating margin also increased. And if you look at the net profit, it increased from 59 crores to 274 crores. But you have to look at that. For example, if you look at the year March 2018, so they did 606 crores, 2019 651, 2020 661, 2021 674. They did not have much increase in revenues from March 2018 to March 2021. So the reason being the market did not do well. So it depends on what are their markets are doing. So yeah, March 2020 we have a huge crash, and then market recovered after that. So you have to make keep in account that this company revenues are mainly based on asset under management of their key clients. So if the market does bad, and that goes in the negative direction, then their revenues can suffer. So it's not like mutual funds, it's falls completely, but then their growth numbers can plummet. And also if you look at their operating margin, for example, it decreased from 38% in 2017 to almost 34% in 2018, and 30% in 2019, and then it again increased to 39%, 40%, currently at 44% for March 2022. But then the management guides 40%, 41% for the long term. So 44% and 47% the recent quarter is not sustainable. And if you look at the sales growth, they are doing 10 years 8%, 5 years 9%, 3 years 4%. So the last quarter they did about 27%. That's because of lower base in the previous year. And also if you look at the profit growth, they are doing 5 years 21%, 3 years 10%. And then if you look at the return on equity, they are doing 36%, 36%, and so on. So the main reason being their net profit was growing pretty significantly is because their operating margin was expanding over the years. So now currently they are currently at the higher side. So going ahead in the few years, their profit margin or operating margin is going to decrease because now they are at 44-47%, and then I think they are going back to 40-41%, because there are other businesses like insurance services or other services, their margin is lesser compared to their mutual fund business. So if they are more and more expanding to other businesses, that also will put pressure on their margins as well. So that's also something to consider. So now currently the company is on the very very good bright side, but then if things started to go bad, and then you have to factor in all that in the valuation section. It's all like not all good, but then you also think of what are the possible risk in this company. So these are the risk I see in this company. The operating margin can go less, and also if you look at the other thing, which is the client concentration, that's also something, also a key risk. And if you look at their balance sheet, so they are increasing their balance sheet pretty good, so they have no borrowing, so the reserves are increasing. That's good to see. Their investments are also not increasing that much, but it's slightly increasing. And also if you look at their cash flow, so cash from operating activity is increasing from 84 crores in March 2016 to almost 237 crores in 2021. And if you look at the free cash flow, they don't have much free cash flow yet. They don't have any free cash flow, so that's also they don't have much free cash flow yet, but they generate cash from operating activity. And if you look at the PAT growth, analyst expectation, so analysts were expecting a PAT of about 300 crores in 2023 and 933 crores in revenue from operations in 2023. And then if you look at the promoter shareholding, the promoter shareholding recently decreased from 30.1% to 23.75%. I think that's because recently the promoters sold 25% of their share, I think. And then if you look at the mutual fund holding, so the mutual funds are decreasing their shares and FIIs are increasing, but the mutual funds are decreasing their shareholding. And if you look at the mutual fund, what they did in the recent months, so mutual funds, they sold in September, they sold in October, they sold in November, they purchased a little bit in December and in January. So if you look into the mutual fund holdings, so they have ICICI Prudential Long Term Equity Fund, and then PGIM India Flexi Cap Fund, and then SBI Magnum, and then PGIM UTI, ICICI HDFC Axis, Sundaram HDFC, and so on. So few funds purchased, very few funds sold in the last 2 months, and many funds increased their share. So after the fall, few funds at least think the company is slightly valued, fairly valued. And if you look at the valuation, so in 2022 they are expected to do about 823 crores in 2022 and 940 crores in 2023 and 1100 crores in 2024, with a growth of 14% for 2023, 17% for 2024. And then if you look at the net income, so they are expected to do about 304 crores in 2023 and 355 crores for 2024, with a growth of 11% for 2023 and 17% for 2024. And if you look at the price target with the current valuation, which is P of 45, then 1 year price would be 2,798 rupees, 2 years 3,267 rupees, with a price cumulative growth of 12% and 31%. But if you look at the average P, which is 52, I would say, yeah, I calculated the price target with a P of 50, but then we have to take into account that the company margins are going to decrease. And also if you look at the client concentration, that's also something to note. And also if market does bad, that's all these key risks are also in there. So I would say this company is not undervalued. So 50 is not a conservative estimate. So P of 50, it's like all it's taken into account all good news, all good for the company 50. So if you want to take a conservative stance, then I would say 35 to 40 P would be a good conservative stance of this company. But then if you look at the average P and all good you take into account, so 50 is an optimistic P for me personally. So if you calculate with the price P of 50, so then the price target would be 3,108 for 1 year, 3,630 for 2 years, with a price cumulative growth of 25% and 46%. So if you ask me, the company is good. It's fundamentally good. It's doing pretty good things. So I also mentioned that there are key risks. So several key risks I already mentioned. So that's also something to take into account, mainly the operating margin and also the key client concentration, and also the market performance and so on. So these are the key risks that needs to be taken into account. And other than that, the company is good for the long term. If you want to hold 5-10 years, I think a mutual fund business, it's pretty good because they are in the underpenetrated market. Mutual fund business, I am more bullish on mutual fund business, and also all the insurance and other businesses all in the underpenetrated market, so that they are going to do well. So then if you look at that, then this business is going to do well for the next 5 to 10 years. But maybe it can if there is a few bad news comes with the margins are under pressure and so on, then in that case their peak and re-rate to the lower side in the short term. So it depends on what kind of investor you are, so and you take the informed decisions. So for me, if you ask me whether I am buying this stock at the current price, so personally I am not buying this stock at the current price, even though it fell down 40%. So I would say there are better opportunities for me in the market than this company, taking into the risk involved in this particular company. So I would say this company is fairly valued, and all the good news are factored in. And then if something goes bad or conservative, then yeah, this company is not undervalued, I would say. That's my personal opinion. So you can have contradicting thoughts. So my personal opinion would be it's fairly valued, and good news are factored in. So that's my personal opinion. So yeah, if you like this video, please like, share and comment. And if you're a new subscriber, or if you are a new to this channel, please subscribe to this channel. And also if you like a free email newsletter, please subscribe in the link below. So that's all for today, and thank you for watching, and have a nice day. Bye bye.